2020, baby. Yeah. Got the color, got the put. I can make the money both ways, always. I can buy the whole chain, go away. Got a lot of love and throwing no shit, no games, small change. I just made my own band.
Hello, people. Another week has come to a close, and it's time to review our AI portfolio. So, this week was particularly good compared to the last one. We closed the week with a return of around 2.72%. So, close to the week in the green. Unfortunately, the bad news is all the other equity portfolios also did pretty well for last week. So all our three benchmarks outperformed us over the last week. Specifically, the SPY. The SPY had a return of around 4.7%, the Nasdaq 100 around 5.4%, and the Dow Industrial Average of around 3.8%, compared to our AI portfolio return of around 2.7%. As usual, we close our very dated trades. So the trade we closed for this week was where the positions in team. So at Atlancia Corp, we closed that for a return of around 10%. We closed our position in Wix for a return of around 8%. Our position in Fortinet for a return of around 6%. So Novocure was relatively flat, a return of 2%. And we closed one of our short positions, position in Tata, for a loss of 15%. So that was a really painful loss. I was expecting Tata to trade down, but unfortunately, it just kept trading up. So I believe the position of the model basically came from the fact that Tata was entered the year around the price of 12.5, and it traded up a lot based on rumors that Tata is going to go into a partnership with Tesla. And based on fundamentals, the model basically said this huge upswing, so that's like a 50% upswing in a month, is unsustainable. But unfortunately, it looks like the market is relentless. So Tata did test 20, retraced, but then it just blew through the 20 afterwards. So it looks like Tata is going to the moon. And unfortunately, it was one of the positions we chose as our hedge. And we had to take a loss on that and close it. But it's all good. There were very good reasons for believing that it had to retrace because the fundamentals were poor, and an initial 50% increase in price based on just rumors is good grounds for expecting a very large retracement. So, in February, our return currently sits around 2.72%, so that's pretty good. Still in the green. So this is the fourth month in the green. Let's hope we can hold on to it. And over the life of the model, we've done pretty well. So we're still doing better than all our benchmarks. So over the time that we've been managing this portfolio, the total return up to date is 15.3%, compared to the S&P 500 return of 10.1%, and the Nasdaq return of 12.5%. Finally, the Dow of 8%. So we're still beating the benchmarks. Unfortunately, they are gaining on us. So let's see how well we do going forward. We need to open up that what's the name again? The gap between how well we're doing and how well these benchmarks are doing. Our risk scores have seemed to stabilize. That's pretty nice. If you remember, we started with a very high risk score of around 6, came down to 4 with a max of 5, and so far this month our risk score has seemed to stabilize at 4. Let's see how long we can hold on to a risk score that low. And the number of copies we have seems to have also stabilized, so we can go into much more detail on that. We did go to as high a number as 24. I think the highest was 25, and the assets under management at that point was 22K. And given how bad the last I think week of January was, we lost a whole bunch of copies. So I think around 5 or 6 left, and we gained I think 2 more copies to stabilize at 22. So at the moment, the assets under management is around 15K. So we're doing okay. Hopefully next week we can still get back one of those. We seem to be getting 1% a week on average. So 1% with respect to the assets under management, and then we go to 16K. Or if we also grow via new copiers, it'll also grow. So far, that's what the journey looks like. Exciting times. The portfolio itself, is doing okay. It's doing okay. So our biggest winners at the moment are positions in Adobe and Autodesk, followed by Fortinet. And the worst performer is really Veritex. So Veritex is a long position and is currently down by 5%, which is again down to the fact that they reported earnings this week. And unfortunately, they reported mixed numbers, right? So, and they also guided down for the next year, for the next quarter. So that's why they're down. But it's still a healthy company. So we do expect it to retrace back all these losses and hopefully put us slightly back in the green before we have to offload that position. We're still holding on to our hedges, so specifically PG&E. It's a utility company, and NISO, similarly utility, and assets related to the oil sector. So these are the three short positions we have just to hedge against possible bumpiness going forward. And we've also added a VIX hedge. So basically, I had to go back to the data and really look through it. And I think the VIX hedge is the best hedge for this portfolio. So with time, we will close these shorts, and we will always have a VIX hedge to guard against what we saw 2 weeks ago, which was this huge tumble. So it's during these periods where the portfolio just falls under us that the VIX spikes. So we can also see that from here. If you go to the VIX plot, exactly. So you see, when we see the huge tumble in our portfolio, that is when the VIX spikes. So by always having a long position in the VIX, what we are trying to do now is ensure against those kind of spikes. When they happen, the VIX blows up, and we use that to cushion the fall in the portfolio. That's the basic idea of why we have the VIX in our portfolio now. So that's enough for today. The journey continues, and see you all next week. If you haven't subscribed yet, please hit that subscribe button, ring the bell so that every time you put on a new video, you get a notification. And please hit that like button so that the YouTube algorithm starts recommending the video. If you have any questions or you have any comments, please do not hesitate to leave them in the comments section. Okay, guys and gals, see you next week, and happy trading to everyone.
I told you I'm gonna do this, don't forget this shit a marathon. You make it move but stay in the same place at West Peloton. Make 100 off a phone call, now that's a telethon. Benjamin's, Jefferson, YOLO to a ghetto spread. Yeah, you know I've been it there. Who's been like a Trinidad? I'm moving like a president.